The 36 system portfolio is at near equity peaks based on yesterday's trade. What is the 36 system stock index portfolio? It is all of the strategies in All Strategy Access 1 and 16 of the strategies in All Strategy Access 2. So it does not include Tick Pulse and QV12, and it does not include 60-minute breakout. And so what are the results from yesterday's trade? We've updated the portfolio calculator to include the results from yesterday's trade as well as the new Tradestation margins that have been lowered as of yesterday. And you see it's near an equity peak, only 782.50 away from an equity peak. You can see yesterday's results by going to Calcs and scrolling down, and it is column, let's go all the way to the bottom. And it is this last column, CT right here, not the last column. Yeah, it is the last column. CT 49.97.50, and so it is near equity peaks. You see the last time it was at equity peaks was over here April the 8th all the way to May the 19th. So that's how trading works. You go through these drawdown periods, and let's look at it on a drawdown curve. And so you can see the monthly results. A lot of the profits for April were made in the first week of April, and you see April is up 13,560, May is up 10,790, and up on the year 138,652.50 with these strategies. And you see the length of the drawdown is the gray area. So sometimes those gray areas last for a while. And so, for example, in this drawdown, the initial loss is down here, and then you're profitable from here up. And so the months from this point forward are profitable. And so you see this was an intra-month drawdown in April, and it's recovered. And you see the little blue line all the way up here near the equity peak. And when you see lots of blues up here, that means it's making equity peaks frequently. And so part of trading is the cycles of trading, and you get additional diversity with additional strategies in markets. And right now the hot market is the stock index portfolio, the hot strategies, and you have 36 strategies to provide you with diversity. As you can see, they enter on buying dips, buying breakouts, buying rallies. There's just a whole list of strategies that we have that have multiple diversity. The big trade yesterday was tick pullback. It was also big on Friday as well. You see some nice entries on these pullbacks, and so you see other strategies that, such as gap continuation, may not have done quite as well because they got in buying strength. And so the first trade yesterday on gap continuation was a loser, and it got in again, made $100 on the day. Most of the gain was overnight. You see the gap overnight, and this is a custom session, so it does not include the first 30 minutes or the last 30 minutes, but you can still see the big gap here, and pretty much sideways after the first hour, pretty much sideways. So that's how the market has been functioning lately with the moves overnight. And so those are the trades on the day. That's the latest portfolio calculator. I've also updated the margins section here as of 5/18 to show you that Tradestation day trade margins were not good for the last hour of the session, and now they are. And the crude oil margins have come back down. The day trade margins have come back down. The first one is the overnight initial margin that's set by the exchange. And so when the exchange lowers margins, these will come down even further. The day trade margin is now at 25%. And so let's take a look at that on the Tradestation website. So you can see that E-mini S&P 13.2, 25% of initial margin. And if you scroll down to the bottom, they've changed this to 4 p.m. Eastern Standard Time instead of 3 p.m. So the day trade margin is good for the entire day trading session. And you see Energy's crude oil now has, it's still high. The exchange margin is high. And then the day trade margin is 50% of initial. They weren't even letting you trade the front month. So now we have a 50% day trade margin. So the margin rates are coming back down. Next, we're waiting on the exchanges to bring the margins down. And the portfolio calculator has been updated on this page. Under the portfolio calculator page, you can go to market portfolios, and you can select download the portfolio calculator, and it's updated through Monday, May the 18th, and let's go over the rest of the portfolios. So this is the 36 system stock index portfolio. The 18 system stock index or 19 system stock index portfolio is doing well also, 2927.50 from an equity peak. Let's look at the monthly results for that. 4,000 up on the month. April was up 11,600, and the stock index portfolios are the best market right now. The 200K portfolio, which includes the 19 system stock index portfolio and some commodity markets, is down. So if you'd like to buy on dips and near worst case drawdowns, this is the opportunity right here in the 200K portfolio. It was up 8,200 in April, down 3,500 in May. Most of the gains in April were early, and then since around the beginning of April, it's gone through a drawdown. You see this drawdown here, similar to this one back here. And so the cycles are faster in the 200K portfolio. The gray area is not as wide as it is in the stock index portfolio because you have a diversity of markets. So if you want to buy these dips and get in on these, you can. And so that's the 200K portfolio. The 25K portfolio is in a good entry spot as well. Some losses in crude oil and gold yesterday. It's down 5,700, so about halfway into a worst case drawdown. Let's take a look here. Up 4,000 in April, down 2,000 in May. Here's what the drawdown curve looks like. It's a normal drawdown curve. Very cyclical for only 10 strategies, so you have to take that into consideration. Nice set of strategies for a small portfolio. This number is still pretty high, 76,947.50, because the exchange margins are high, but that will come down as volatility decreases. And you don't ever see all 10 strategies taking a net position. So you could trade this with as little as 50K, and other brokers have smaller margins. And those are some of the things to consider when trading this portfolio, is your brokerage margins. Let's take a look at the 100K day trade. It is at, okay, it's near worst case drawdown as well. So oftentimes we want to buy things when they're doing well. Buying the dips and when they're in a down cycle before they go back into an up cycle is one of the best ways to get in. You see this drawdown here, similar to this drawdown here. And so commodity markets have not done as well as the stock index markets. Let's take a look at the 200K portfolio. Or the 100. Let's see, look at the 200K. Now the liquid day trade portfolio. This is the, we're already on, okay, this is what we want to look at. 25,365 is worst case drawdown. 11,406.25, how is it done on the month? Up 7,000 on the month after being down 9,900 last month. Here's what this looks like in the drawdown curve cycle. Let's move this down a little bit. So it came down here near worst case drawdown. It's rebounding a little bit. And so let's take a look at the next setup. SR counter trend 234. Some of these are old. You can see the dates on those. Those that have previous dates are old. We're going over just the latest 7 portfolios. It's halfway into a worst case drawdown, and so you can see the strategies that are included. And it is down in April and May, so we're looking for a bounce back in this portfolio. You can see how SR counter trend did very well when we were going through drawdowns in the stock index portfolio. SR counter trend did not, and now that stock index portfolio is doing well, SR counter trend is having a drawdown. So you can see the cyclical nature of the portfolios. One of the things you don't want to do is jump around from equity peak to equity peak. You say that one's at an equity peak, so you jump in, and then it goes through a drawdown, and then you jump to another portfolio that's at an equity peak, and then it goes through a drawdown. If you're going to jump around, jump from a portfolio that's at an equity peak to a portfolio that's in a drawdown, and that's a better approach. It's not as systematic if you just do that seat of the pants. It's best to be consistent and stay with one portfolio, but if you're going to jump around, don't jump from equity peak to don't jump from a drawdown to an equity peak, and then if that goes to a drawdown, jump to another equity peak strategy. Just stay with it and be patient. And that's one of the things you have to realize in trading is a consistent approach, a methodical, systematic, back-tested approach. If you can systematically determine a way to jump around, then do so. But definitely jumping from a strategy that is in a drawdown to one that is in an equity peak, and then if it goes to a drawdown, dropping to another one that's at an equity peak, usually just compounds losses. And so you can see the cyclical nature of these drawdown curves, and that's one of our main focuses when we talk about strategies, is the risk and the drawdowns and where they are. And so stock index portfolio is a good place to start. You can trade these on the micros as well. You need about 1/10 of the capital to trade them, and the results are slightly less than 1/10 because the transaction costs are higher. And if you take a system like this, 36 strategy portfolio, it says you need 220,000. You'd need about 22,000 for a micro portfolio if you wanted to be conservative. But you can also say that not all strategies take a net position at the same time ever. We've never seen that, not even close, maybe half that. And so you could trade with about half the margin and trade this with much less capital. So if you trade this with about 90,000 in margin, you could trade with 15,000. You could probably trade this with the micros with 12 to 15K on the stock index portfolio 36 strategy. So that's the update for today, going into May the 19th trading. Have a good trade.